Hello everybody, this is Eddie Ghabour, owner of Key Advisors Group. Please subscribe to our YouTube channel for up-to-date videos on portfolio positioning we're doing for clients, as well as overall market commentary and economic opinions. Of course, everything that you do has to be in what you think is best for you and your family. So these are just our opinions and some of the things that we're doing with our clients. So the question of the day that we are getting today is this a bear market bounce, or is this the beginning of a new bull market rally? Since November, we have come out on national stage and talked about the fact that we were very concerned about the next 12 months moving forward because of our thoughts on GDP decelerating. And one of the main reasons behind that is because of the inflationary pressure that has been put on the consumer. So our opinion is this rally, and it has been an impressive rally, is really nothing more than a bear market bounce in our opinion. We will have to wait and see if we are correct or not, but that is how we are positioning our portfolios. That is how we are positioning what our next buys are going to be, is under the premise that we are not out of the woods yet. And why do we say that with such strong conviction? Is because A, we believe that bear market rallies, when you look in the past history, and of course it's only history, but that's all we have to go off of on these bear market bounces, is many times they're very, very violent. And this is about as violent as they get to see the huge move that we've seen in the last several trading days. And that's great because it allows investors to reassess risk and think if they want to reposition. More importantly, when we take a look as why we continue to have this strong conviction that this is just nothing more than a bear market bounce, is the fundamentals haven't changed from an economic dynamic. And I would argue that due to the war, things have actually gotten worse. Oil prices, natural gas prices have really gone up. And that is one of the things that really directly hits the consumer the hardest, because when they go to fill their car up, it's costing them more. Whether they're going to go heat their home, it's going to cost them more. And all the other indirect things that fuel costs cause us to pay higher prices for. So if anything, this high commodity price is going to cause GDP to decelerate even faster than we were originally concerned with, because the inflation is hotter than what we thought it was going to be. You know, no one knew that there was going to be a war that was going to cause oil to rip through the hundreds, but that's what we're faced with today. And now the Federal Reserve has just said that they're going to be more aggressive than what they had originally even said in regards to their tightening. So again, not getting tied up in the emotions of things and not trying to chase a market that we believe is bear market is why we're not going to chase this rally, not in the high risk assets. We feel like the opportunities are in the more bond proxy type portfolio positions that we have, and we've added to those. So when you have bear market bounces and risk assets are shooting through the roof, a lot of times bond proxies are going down in this last week. And so we've incrementally been buying that. Now, if we're wrong, we'll admit we were wrong and pivot out. So we're going to have to wait and see. But we're very, very concerned about the data that's going to be coming out. And again, this war and what the Federal Reserve is going to be forced to do, we think that this is an opportunity to just continue to be defensive and be opportunistic. And we think those opportunities may potentially come later on in the year, and that this, again, is just a bear bounce. And we don't want to get caught chasing it and then end up getting whipsawed. Because remember, these moves are very violent, and they can happen quickly, not only on the upside, but on the downside. So let's wait and see what happens here in the next 30 days. See if this market rally that we're living through right now has legs, or is it going to stall out and go right back down to the lows, or maybe even lower than the lows that we've seen earlier this year. Okay? I think you know what our opinion is, but time will tell if we're right. And as we've always said, you're only as good as your last call. So that's our call. We're sticking with it. That's what we're doing for clients, and we'll have to wait and see how it materializes. With that being said, at the end of the day, as I said, the decisions that you make have to be what you think are best for you and your family, regardless of what our opinion is, because we don't know your personal situation. So thanks for watching. I hope you enjoyed this video and the other videos that we continue to put out every week. Thank you, and make this a winning week.